Welcome to the Transparent FX Academy. My name is Nick and I'm a top author on TradingView with over 260k reputation points. And every day on this channel, I share a lot of free education and analysis. So make sure that you subscribe and I will see you on the charts for today's analysis. In today's video, I want to speak about nzdjpy. Now, why I want to speak about nzdjpy, at the moment we have very interesting price action and structure. We have also just completed exactly the move that we wanted to see from our previous analysis. So it's definitely time to make an update. And as usual, I will be first covering the technical aspect of this market. Then we will go and see what we have from an order flow perspective. So COT data, which is basically commitment of traders, so what the non-commercials and the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on the pair. Now, starting from the monthly time frame, what we can see is that the market has just created a strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, what we can see here is that the market has just retraced exactly to the 0.382 of the Fibonacci taken on the monthly impulse, which is a quite strong monthly support and demand area that we did expect the market to test before then potentially getting rejected to the upside. So here in the monthly, everything seems quite bullish. We go down on the weekly time frame, and what do we have? Now, here in the weekly time frame, what we can see is that we have just created a strong impulse and correction. Once again, if you want to measure the correction, the Fibonacci must be placed on the impulse. So in this case, from this low to this high. And we can see here how we have just tested the zone, which is in between the 0.32 and 50% of the Fibonacci taken on this monthly impulse. And currently we are rejecting the area to the upside quite aggressively, which is usually what we expect in situations like this. And there is definitely the possibility to see the market here create more continuation to the upside, even for the creation of a higher high, which would at that point complete this impulse correction and impulse pattern to the upside. So also the weekly here seems quite bullish. We can also see how we have at this area previous weekly resistance, which now that the market has broken into the upside is turned support here, lining up perfectly with those two Fibonacci levels that we have just identified, creating a quite strong structure support area. That is the level that, as we just said, we want to see the market reject to the upside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestion for new videos. We go down on the daily time frame, and on the daily, what do we have? Now here in the daily, we can see how the market has just created this M pattern. Now, in general, after the creation of an M pattern, you want to see the market create a move to the upside to retrace at least to the 0.32 of the Fibonacci taken on the daily impulse, but possibly you want to see the market create a move to the upside, even all the way up to complete the pattern at the previous support, turn resistance, which is the neckline of the M pattern itself. And in fact, I made a full breakdown of nzdjpy while the market was around this area, explaining all the reasons for which we wanted to see the market start this move to the upside, and that is what the market just started. And by the way, I will link this previous analysis in the description so you can go and check it out for more free education. Now, at the moment, what we have here on the daily is a market which is still below the neckline. This area is previous support turned resistance. So basically, wrapping it up, on the monthly, we expect bullish price action. On the weekly, we expect bullish price action as well. However, here in the daily time frame, we are still below this previous daily support turn resistance. So how do we approach a situation like this? Because we know that the higher probability setups happen when all time frames are showing the same direction. But in this case, on the daily time frame, price action is showing that we are still below previous support and resistance. Now, before I show you how you can approach a situation like this, let's go and see what we have from a COT perspective. Now, if we check the data for the NZD, what we can see is that at the moment, net positions have just shifted to positive. We went from having a negative minus 2.1k net positions all the way up to having a positive 6.2k net positions. So basically we went from having more shorts than longs from an institutional perspective to now having more longs than shorts. And if we go and see what we have on the JPY, we can see how we have a massively negative net positioning with minus 60k net positions and 82k shorts and only 21k longs on the JPY, which obviously does make the JPY quite weak, and a strong NZD and a weak JPY is exactly what we need if we are to create here the continuation to the upside that the monthly and weekly timeframes are currently showing. So the way in which here all timeframes would be showing the same direction is if we get a break of structure from a daily perspective. Now in this case, unless the market will create a new structure level, the only structure that we have is this previous support turn resistance, which means that in order for the daily time frame to align with the monthly and weekly, we need to see a daily break and close above this resistance. If that will happen, this will, since it is previous resistance, be turned support here. And at that point, we expect a retest of previous resistance turn support. And that would basically be the best area inside of which we can be looking for a potential longing opportunity. And how we will be doing that with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So if we will have a successful break and close above this resistance on the retest of the previous resistance turn support, we will be monitoring price action from a 4-hour perspective and lower, with students waiting for the market to shift from an intraday bearish market as we will have to an intraday bullish market. And only if the market will shift from an intraday bearish to an intraday bullish market, only at that point we will be adding nzdjpy to our watch list. And as soon as the market will provide to us one of our valid entries, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside, and for the market to provide and create a potential higher high. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. You first get all the rules of my rule-based strategies, then you get a new daily market breakdown every single day showing you how to apply these strategies in real-time market, and you also get all your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.